Hi, and welcome to the Sophisticated Investor. Over the past number of weeks, we have analysed Cassini Resources, an ASX listed company who is developing the Nebo Babel nickel copper project in Western Australia. And after completing our analysis, which includes a site trip to the project, interviewing management, as well as completing a detailed cash flow analysis on Nebo Babel, we believe there is significant upside potential in the current share price as we value Cassini between 20 and 24 cents per share. We determined a valuation range as we completed our financial analysis on two production scenarios as highlighted in the scoping study. A 4 million tonne per annum operation, as well as a stage production option. We have also completed a range of upside and downside valuation scenarios. The results found that with the exception of one scenario, all had higher valuations than the current share price, which we believe highlights the robustness of the project as well as the long-term upside potential in the current share price. For full details on our valuation analysis, please view the valuation video. Cassini acquired the Nebo Babel project from BHP Billiton in 2014 and has since increased the size and confidence level of the resource, as well as releasing a positive scoping study earlier this year. The scoping study highlighted that Nebo Babel has the potential to be a large tonnage, low-cost nickel and copper operation, with production due to commence in 2018. The key aspect that we believe drives the project economics and our valuation is the low forecasted operating costs at the project. We identified two major factors for this. The first being the project will produce 6 other metals as well as nickel, with a revenue or byproduct credit from these other metals offsetting the operating costs of the project. With the second driver being the shallow, flat nature of the ore body, which allows for a bulk tonnage, open pit mining method. Nebo Babel would become only the second open pit nickel sulfide project currently operational in Australia, with the other being BHP Billiton's Mount Keith operation, which Nebo Babel compares favourably to. One risk, however, associated with the project that we investigated in detail was its location, or more specifically, the distance to port. However, after visiting site and travelling on the same route that the concentrate will take, we found that whilst long in distance, it will not be challenging, as there is already significant road, rail and port infrastructure options in place that Cassini can utilise. We also stress tested the haulage costs and found that even when increased by 50%, the operating costs were still very competitive. In addition to Nebo Babel, the exploration potential within Cassini's West Musgrave region is largely underexplored. The most promising target identified to date is the Sukhoth prospect. BHP originally discovered Sukhoth in 2009, and much of the exploration work completed was targeting shallow, copper-rich mineralisation over a strike length of 3 kilometres. Since acquiring the project, Cassini has reviewed these historical results and identified a number of follow-up targets, with a drill program recently commencing to test a large EM conductor. We note that any major success from the current or future exploration programs could see Cassini's share price quickly surpass our valuation. For full details on our analysis, including our valuation, investment and risk analysis, operational and exploration reviews, as well as a range of management interviews, please visit thesophisticatedinvestor.com.au. And if you have any comments about our report, please send an email to admin@tsicapital.com.au.